Our speaker tonight is taking on one of the big issues of the day, the return to this world stage of great power competition and its effect on the world economy. Russia has invaded Ukraine, a reversion to a 19th century imperialist quest for territory. And China, after experiencing huge economic growth, now wants to play a role as a great power on the world stage. We're already in conflict with Russia indirectly, that is. And our relations with China are now described as the worst in decades. And they're leading to a confrontation that in the worst case could actually lead to conflict. Patrick Hernandez is well placed to analyze these events as the lead author of the daily economics bulletin for his investment firm. Its contents are succinct, solid, and boy, are they timely. Here are some of the items from today's bulletin. China has banned the use of Apple iPhones for government workers, Chinese government workers. And another one, US imports from China fell to the lowest level in 17 years in July. Chinese companies have reduced investment in the US in the last year to the lowest level in 13 years. And finally, the US government is now trying to restrict US investments in Chinese companies. Patrick is a market strategist for Confluence Investment Management in St. Louis. He analyzes global economic and geopolitical developments, including international security and their implications for investment strategy. His early career experience was at the North Atlantic Treaty Organization, NATO, and at the Central Intelligence Agency. He earned a BA degree from Notre Dame. He has a Master's of Business degree from Arizona State University and a master's degree in public policy from the John F. Kennedy School of Government at Harvard. Patrick, the floor is yours.
All right. Well, thank you very much, Roy, for that very generous introduction. And also thank you to all of you with the Baltimore Council on Foreign Affairs. I really appreciate the opportunity to come and share my analysis and the views of myself and my firm, and touch on what I think are some really important issues and themes going on in the world today. So I also love the opportunity to do a talk like this and get your questions and concerns and what's on your mind. So I really do look forward to the Q&A session at the end of the presentation. Just one warning I'll give you. As Roy mentioned, my early career was actually as an analyst at CIA. I think at this moment we're only about 3 or 4 miles from the agency, and my heart is fluttering a little bit. If I hyperventilate, just please bear with me. It's exciting to be right here doing this. So without further ado, I'll jump into my presentation, and again, look forward to a lively Q&A at the end. So let me start out first of all by just mentioning that as an investment firm, we at Confluence, I think we're a little bit unique, a little bit different in that we have a strong macro analytical team that takes a very top-down approach to understanding the world investment environment. We look at everything from geopolitics to global economics to demographics, international political trends, financial markets, obviously, and use that as a way to gauge what the global investment environment looks like today and where it's going. Beginning more than a decade ago, we started to talk about how the US is starting to back away from its traditional role as the global hegemon, as the big, powerful country that dominated the world and provided security and facilitated trade. It was a major determinant of world cultural trends, etc. Being the hegemon involves a lot of high costs, military costs, for example, long bloody wars, and a lot of economic costs as well. And in our view, beginning more than a decade ago, we thought that the U.S. voter was getting tired of bearing these costs, and that's why you started to see the rise of isolationism and a desire to pull back from the world. Well, lo and behold, what happened is as we started down that path, we opened up space for countries like China and Russia and other misbehaviors to step into the breach and to become more aggressive. And so this brings us to the point that I want to pick up the story at specifically regarding how China has strengthened itself and also become much more aggressive, and what that means for the global economy. And of course, since I work for an investment company, I'll wrap up with some observations on not only the economy but also investments. So, without further ado, let's talk about how China has developed what they term their comprehensive power. So, their power in various dimensions. Let's start out with political power. So, first of all, as I'm sure you're all aware, China has a seat on the UN Security Council. So, that gives it a veto over important global policies, global international decisions. But what you may be less aware of is that they're also aggressively trying to expand their control over a number of other UN bodies. So, for example, UN organizations that deal with things like telecommunications equipment standards and development programs for poorer countries. China is also actively trying to build its influence by inserting more people in global bodies such as the World Bank, etc. China also is working hard to expand their diplomatic infrastructure and operations. They actually now have the world's largest and most extensive diplomatic operations. So, in other words, embassies, consulates, trade missions, and the like. You may be aware also that they have uh, dozens and dozens of Confucius institutes at colleges and universities around the world that seek to promote Chinese culture, use of the Chinese language, and also many times try to promote Beijing's view on international politics. And then finally, gone are the days when Chinese diplomats would be pretty low key and easy to get along with, didn't try to rock the boat. These days, it's been reported that President Xi will send a handwritten thank you note to his diplomats that take a hard line on something that the U.S. or one of our allies does when they're much more aggressive than the traditional Chinese diplomat. They get a lot of kudos from Beijing on that, and that just increases that effort. Nevertheless, I don't want to overstate what China is accomplishing in terms of soft power. They still are very clearly seen as authoritarian. And then on top of it, one thing that we'll talk about a little bit more here is that weakening economic growth will also put a limit on how much they can improve their diplomatic power. Now, more interesting, I think, let's take a look at military power. Now, when I was at CIA, I worked in a branch that followed Soviet and then Russian defense economics. So everything about the military and how the military effort impacted the economy, and then vice versa. So I pay a lot of attention to military spending. In this chart, the blue line at the top there is U.S. Defense spending as estimated by CPRI, an international relations organization based in Stockholm. And obviously, a big upward trend. but not necessarily smooth. Lots of up and downs over the last quarter century or so, which has presented some challenges for the military and for defense industry. If you look at the red line at the bottom, that is Chinese defense spending as estimated by CPRI. Again, certainly an upward trajectory, but a lot smoother than in the US. Now, remember that the Chinese government intrudes in the Chinese economy very extensively, even to this day. And one aspect of that is that pricing is not necessarily accurate, and especially when it comes to pricing for defense goods. And so I like to take the figures shown in the red line there and adjust them by the purchasing power of the Chinese currency. And that's what you see with the gray line there. And you see that over the years, there's been a strong upward trend. Nevertheless, by this measure, China still spends a lot less than the US, only about $500 billion a year versus more than 800 billion by the US. But remember, as I mentioned, the US is still the global hegemon. So essentially, our defense sphere is global. For China, even though they have long-term ambitions, remember that as of now, I think you can make a pretty good argument that their core defense sphere is, let's call it, the eastern half of the northern hemisphere. Okay, so if you adjust by the square mileage of those two defense spheres, things look a lot different. And that's what I'm showing in this chart. So in this chart for the US, I'm assuming that our defense spending is spread over the entire surface of the Earth, except for Antarctica, which is nominally non-affiliated and neutral. For China, again, it's the eastern half of the northern hemisphere, and you see it's a dramatically different picture. China, in their own sphere for defense, is spending more than $10,000 for every square mile in that sphere. For the US, we're spending about $4,300 for every square mile of the globe outside of Antarctica. So it's I think, a really dramatic illustration of just what China is doing militarily. Now, if we ever got into a conflict with China, I think most people would recognize that the most likely area for that to be would be in the waters around Taiwan, as China tried to take control over Taiwan again. So I pay a lot of attention to relative naval power. In this chart, I'm showing the number of ships that China has and the US has in different categories of naval vessels. Now, first of all, I guess what I should mention is that, China now actually has the world's largest navy with a combat force of roughly 350 ships. Surface ships and submarines. The U.S. right now stands at about 295. And so in this chart, as I look at the individual types of vessels, I've arrayed it so that the larger and more capable platforms are to the left, and then it works over toward the right with the smaller and less capable platforms. And as you can see, for aircraft carriers, cruisers, destroyers, the big blue water Navy type of surface ships, the U.S. has a big advantage. But if you look at frigates, corvettes, smaller ships, that's really where China excels. Kind of a similar thing with submarines, ballistic missile subs, nuclear attack subs. The U.S. is very dominant, but when you get into smaller, less capable, less modern subs, China is really in the driver's seat there. And all of this, if you think about it, that Chinese emphasis on what is essentially a navy that's geared toward dominating the waters along China's coastline, what that reflects is their current key strategy of anti-access area denial. So in other words, making sure that they blanket the oceans around China with naval assets and, as you'll see, missile assets that would scare off the U.S. Navy from intervening if they ever did make a move against Taiwan. Now, it may be tempting to think that the Chinese Navy is made up of a bunch of 1960s era rust buckets that really aren't very impressive. I like to use these photos to just give you a sense that no, not necessarily. These are largely modern, multi-role, very capable platforms, advanced sensors, advanced weaponry. I would call your attention especially to the two carriers up at the top. That Shandong, that is China's second carrier, and you see the ski lift shape to the bow. That's to help Chinese aircraft get into the air. It's not a particularly effective way to do that. If you look at the Fujian, which was launched just last year, you see those long boxes on the deck. What those are is simply structures to hide the fact that now this ship has very advanced electromagnetic catapult systems that are going to allow a much faster pace of operation and a lot more types of aircraft to get off that ship. So again, just a lot of development in the Chinese Navy. If you look at air assets, kind of a similar story in the sense that the fighters, bombers, transports, attack helicopters, the U.S. really dominates in those areas. We still also dominate in terms of the longer range ballistic missiles, the sea-launched ballistic missiles. But look off to the right at the counts for the intermediate range and the medium range and the short range ballistic missiles. We just don't even show up. And that's largely a legacy of the Cold War, where the US signed arms control treaties with the Soviet Union and then continued them with Russia, which until very recently have tied our hands in developing those shorter range missile systems. In terms of aircraft, I also like to use these pictures to drive home the point that these certainly look to be pretty capable assets. You'll note that some of them look surprisingly like US aircraft. That really shouldn't be surprising, since a lot of the technology was stolen from us and the designs were stolen from us. And then I mentioned the missiles. I like to use this map because if you see in the dark red area, that's showing the range of Chinese just short range missiles. And you see even just that one class is enough to cover all of the Koreas, virtually all of Japan, northern part of the Philippines, virtually all of Vietnam. And then if you include the medium range and the intermediate range, you can see that China really is blanketing a lot of the Western Pacific. So again, this is a reflection of the anti-access area denial strategy that they have. We really do think that over time, China does want to develop say a blue water navy that can project power worldwide, and they want to really be a worldwide power. But again, as of right now, the real emphasis is on the waters close to China and anti-access area denial. Now, one thing that we think is particularly important now is that even though China, for decades, has focused on those shorter and intermediate range missiles, one thing that Western analysts discovered a couple, 3 years ago is that they're starting to really build out their intercontinental ballistic missile force. We've discovered a number of new silo fields out in north central China. You can see the map with highlighting where one of those fields is. To the right of that, you see a satellite photo showing just the dozens and dozens of silos that are going to be built in that one area. If you just put a missile, a MIRV missile with say 10 warheads on each of the missiles, that field alone could give China enough warheads to actually surpass what the U.S. currently deploys. To the lower left hand, you see a structure that a temporary structure built over one of those silos being built. They're clearly trying to hide what they're doing. And then to the lower right, believe it or not, that's actually a picture of a Minuteman III installation in central Montana. And that's just to give you a sense of what this looks like kind of from ground level. These are out, far out into rural areas, undeveloped areas, as a way to try to protect them from both foreign espionage and then from foreign attack as well. And this chart simply shows the range of the key Chinese missiles. Bottom line here is simply that those ICBMs can cover virtually all of the continental United States. I'm not going to say a lot about ground assets. Really, probably the most obvious thing is that because of China's huge population, they field a lot more active duty troops than the U.S. But one thing I do want to emphasize is that Chinese demographics have really moved against them in recent years. We're now to the point where their death rate is larger than their birth rate. The population is in outright decline. If you look at just the military age population, by my estimates, that cohort alone is declining by about 600,000 people every single year. But just as important, one thing I like to highlight is that because of the infamous one-child policy that China had for so long, virtually every single soldier, sailor, and airman in the Chinese military these days is an only child. If you think about the political ramifications of that, if we ever did get into a conflict and thousands or maybe tens of thousands of Chinese families are having their only child come home in a body bag, you can imagine the potential for loss of support for the government. We think that's a really important issue as we move forward. Well, now let's turn to economic power. For the longest time, over the last few decades, in the period of globalization and in the period after China joined the World Trade Organization, there's been kind of worldwide this idea that China is growing so fast that it's a huge market. It's going to be huge opportunities. They're going to be importing from other countries. And so this has really made a lot of countries interested in currying favor with China. It's given China a lot of leverage, a lot of economic leverage. But if you look at what they actually import and the volume of what they import, the US actually is in a stronger position than you might think. So on the right side in blue there, you see US imports in 2019. I simply use that year because it was the last one before the disruptions of the pandemic. The lighter color at the top is service imports, and then the darker blue is goods imports. And you can see that we import about $3 trillion a year from other countries. Look at China. They do a lot, but still only about 2.5 trillion. If you look at it in terms of the impact on GDP of those countries that are exporting to the US and China, it's a similar story. So looking at the bar on the right, you can see that for the typical country around the world that's exporting to the US, those exports account for about 4% of their gross domestic product. So in other words, about 4% of GDP or their economy. For China, for the average country selling to China, those exports only provide about 2.5% of their GDP. So again, the US has a lot more leverage than you might think. Now, what had been happening is that the growth rate of Chinese imports had been really strong for an awful long time. So over the last 30 years, while the US imports were only growing by about 6% per year, Chinese imports were growing by about twice that pace. But if you look at the far right of this chart, you can see that pace of import growth for China has really hit a plateau and really leveled off in recent years. And that makes sense given the fact that the Chinese economy now is so much more mature and slower growing than it was in the past. And then in addition, as the government intrudes into the economy again, it's really taking the prospects for Chinese import growth out of the equation. I won't say a lot about capital flows other than that, again, here, if you look at foreign direct investment and portfolio investment, the U.S. By far is the bigger player globally. It is true that Chinese bank lending has been very strong over the last decade or more. However, in the last couple of years, even that has actually started to fall off a lot, and that's because of the problems that they've had with the Belt and Road Initiative. Now, so what I've just shown you is a number of different important ways that China has built up its global power, its comprehensive power, as they like to refer to it. And now that the West has really started to realize the growth of that power, and then as the West has seen China become actually much more aggressive in its actual behavior, we've noticed that it's driving a certain fracturing of the world into relatively separate geopolitical and economic blocs. We refer to it as deglobalization. And this has some huge implications for the economy going forward. And that's really what I want to dive into in the coming slides. So, about a year and a half ago, as we started to get a sense for just how much this fracturing was happening, I wanted to do a study looking at about 200 countries around the world to estimate or to forecast which camp they're going to end up in. Are they going to end up in a China bloc? Or are they going to end up in a US bloc? Or a China leaning bloc? Or a US leaning bloc? Or a neutral bloc? And I wanted this to be very objective. I wanted to be far from being subjective. And so I came up with a number of numerical, quantitative indicators. I won't go into these in great detail, but this is just to give you a sense of the kind of criteria that I applied to these 200 different countries to try to understand what block they're going to end up in. Now, like I said, it was 200 countries. I can't show a chart of where each and every one of them ended up. It wouldn't be legible. But in this chart, I'm showing just some representative countries in each of the blocks. And take a look, first of all, at that US-led bloc on the far left-hand side of the screen. So the US, the UK, Canada, France, Finland, Poland, Japan, New Zealand, South Korea, Mexico. If you think about it, what this analysis has told us is that the US bloc, as it's evolving, is basically today's rich, highly advanced, highly industrialized liberal democracies, plus a few closely related emerging markets. Now, look over at that China led list: China, Russia, Saudi Arabia, Iran, Iraq, Tajikistan, Pakistan, Nigeria, Congo, Venezuela. There are three very different characteristics about this bloc. First of all, it tends to be authoritarian countries. Secondly, they're all emerging markets, or what we refer to as frontier markets in the investment world. And then finally, note that they're all big commodity exporters and commodity producers. That has some really important implications that I'm going to jump into. Now, first of all, let's take a look at how the world breaks apart, or how the world looks if you look at it from the perspective of these blocks. In terms of global population, you would think that the China bloc and the leaning China bloc are kind of in the driver's seat. In terms of global population, they account for two-thirds of the people on the face of the earth. And then the US bloc and the leaning US, and then even if you count neutrals, only about one-third. But what if you look at it in terms of global GDP? It's the complete opposite story. The US bloc and the leaning US bloc and the neutrals alone make up about two-thirds of global output, whereas the Chinese bloc and the leaning China only about one-third. If you look at it in terms of GDP per capita, so in other words, a measure of wealth per capita or productivity per capita, look at that for the US here in this chart. On average, people in the US bloc produce GDP valued at about 42 or $43,000 per year. Look at the China bloc, only about $15,000 per year. Dramatic difference. If you look at economic freedom, so in this chart, I'm showing the average score for the countries in the different blocks using the Heritage Foundation Index of Economic Freedom, which is a way to measure characteristics like protections for private property, the freedom of the markets, indicators like that. The US bloc is by far much freer than the China bloc. Now, if you look at the level of exports of China and the US to the different blocks, we think this is really kind of eye-opening. So in this chart, what you see with the red bars there is that uh, over the 5 years ended in 2021, China exported on average about $1.6 trillion of goods each year to the US bloc. So the US and the US and the members of the US bloc. For the US, we exported only a little bit less than $1.2 trillion per year to the rest of the countries in our bloc. If you look at it in terms of the importance to GDP, it's even more stark. So what this chart is showing is that for China, Chinese exports to the US and the rest of the US bloc account for about 11% of China's GDP. For the US, our exports to the rest of our bloc only account for less than 6%. Now, when you look at this chart, I think there's one word that should jump to your mind. And I think that word is dependency. China and its bloc are highly, highly dependent on selling into the US bloc. And that makes a lot of sense, right? Because we're the rich bloc. We may not be growing all that fast, but countries want to sell to us. Now, this goes far toward explaining why, under the Trump administration, not only did policymakers begin to really understand the China threat and the Chinese aggressiveness, but they also started to understand where our points of leverage were. And so we fought back by imposing big tariffs on China, by imposing various types of import restrictions. We really understood where we could operate to try to bring China back into line and to behave better on the world stage. It's especially interesting if you look at particular types of trade like semiconductors. So in this chart, I'm showing the trade balance for semiconductors by block. So what you're seeing here is that for the US block, in the 5 years ended 2021, the block as a whole had a trade surplus in semiconductors of more than $100 billion per year. Not only was that a nice, hefty trade surplus, but it's also fairly diversified. A lot of it's Taiwan, but it's also the US, Israel, a number of other important countries in the US bloc. Look at the China bloc. huge deficit in terms of semiconductors. And so this goes far toward explaining why in October of last year, the Biden administration, which not only kept the Trump administration's tariffs and general trade restrictions on China, but last October went farther and imposed all kinds of restrictions on the most advanced semiconductors. So not only restricting the sale of US advanced semiconductors themselves, but restricting the sale of semiconductor components, advanced semiconductor components, also manufacturing equipment for producing advanced semiconductors. They've even outlawed the service of manufacturing equipment designed for producing these semiconductors. Now, if you think about it, restrictions like that, if those were being enforced by the US Navy somewhere in the South China Sea, that would be a blockade. That would be an act of war. And again, this is just an example of how the US has finally not only realized the strength and the threat from China, but we've realized what we can do to fight back, and we're actually doing that. Now, I want you to ask yourself, is China just going to sit back and let us do this? I think the answer is no. And I want you to think back to that chart that I showed where I listed the representative countries in the China bloc. Like I mentioned, they're commodity producers. We think that a key way that they're going to respond and fight back is by weaponizing the commodities that they control. Now, can they weaponize every commodity? No. So in this chart, I'm giving an example of a type of mineral commodity where they can't leverage it against us. So this is iron ore resources. The heavy brown bars show proved reserves in the different blocks, and then the green bars showing production. And iron ore is just really widely distributed around the Earth's crust. There's really nothing that the China bloc could do to weaponize this against us. But what about something like cobalt, which, as you may know, is important to the electrified economy of the future? And here you see it's a much different story. The China bloc has a large amount of the world's reserves of cobalt. They're also by far the world's largest producer of cobalt. Rare earth is another example. Again, this is a mineral commodity that's very important for the evolving electrified economy of the future. And China not only controls an awful lot of the world's reserves, also a lot of the production. If I could show refining capacity, it would be even more at this, the same story. So again, this is the kind of thing that we think China and its bloc are going to weaponize. And of course, crude oil, very similar story here in this chart. I'm showing in the red bars actual consumption as well. And of course, natural gas. And we saw an example of this, of course, last year when Russia invaded Ukraine. And as a way to punish the Western Europeans for supporting Ukraine, they weaponized natural gas by cutting off the supplies. We just think we're going to see more of this kind of behavior going forward. So what are the economic implications of this deglobalized, fracturing world? In terms of corporate strategy, we are already seeing global supply chains being restructured, nearshoring or friendshoring of production, near investing, friend investing. So in other words, moving or rechanneling investment to the US or to our friends. Resiliency policies like keeping higher inventories, more spare capacity. In terms of macroeconomic implications, remember, as we bring production home or bring production back into the US bloc, frankly, it's more expensive to do business here. And so we're going to see reduced international trade and investment, but we're also going to see higher investment needs as we move production facilities back here. We're already seeing a big boom in factory construction here in the US. That's going to mean higher interest rates, higher production costs are going to mean higher inflation and lower margins going forward. So just to wrap up, as I mentioned, being from a investment firm, we pay a lot of attention to what this means for investment strategy. We think maybe the biggest implication is that the old standard portfolio of 60% stocks and 40% bonds might not be appropriate anymore. We do think that for stocks going forward, they're still going to beat bonds. They're still going to offer good returns. We may go through a period where lower margins and higher inflation hurt returns for a while, but ultimately we think companies will adjust. Where we think there is going to be long-lasting damage is for fixed income. And as you see higher inflation, higher interest rates, higher volatility in inflation and interest rates, we think that's going to produce a long-lasting bear market in bonds. Um, as you might imagine from what I was saying earlier, though, we think commodities are really interesting. Commodities typically do well in times of geopolitical tension, and we think that especially with the way that the China bloc is likely to weaponize commodities, we think that's especially going to help commodity prices going forward. So we think in this new world where we're heading into, maybe what you think of is a portfolio that's more like 60% stocks, 20% commodities, and 20% bonds. No presentation by a financial firm is complete without disclosures. I'm sure you'll thank me for not making you read this. And then finally, just to wrap up, we put an awful lot of thought leadership pieces, analytical pieces, including podcasts on our website, and we're on social media as well. And we invite you to take a look at our materials as well. I guess we are opening up to questions and answers. Is that right, Roy?
Yes. Let me, first of all, thank you so much for the presentation, Patrick. I think that was complete, that was exhaustive, and you really got a sense of the lay of the world and where things are going. But I wanted to ask you a question because it's one of the things I promised members that you would speak about, and that is, how is it going to affect individuals, this great power competition? How does it affect our pocketbooks? How does it affect our, other aspects of life in these United States?
There's a number of different ways. As I mentioned in the presentation, one way that it'll affect all of us is we're going to be in a higher inflation environment. So, we don't think we're going back to the world of 2% inflation that we were in for the last decade. We're thinking something more like 3%, maybe a little bit above 3%. If you're drawing Social Security benefits, you're going to see bigger cost of living adjustments over time. Of course, when you go to the grocery store, you're probably going to see higher inflation in what you buy there. Higher interest rates will probably make it more challenging to buy a home or a car. So certainly there are some negative implications there. But as much as anything, I like to emphasize the opportunities as well. I mentioned this move to reshore and bring production back home. We really think that we're in for a period of reindustrialization in the US. Like I mentioned already, the data is showing that we are in an absolute boom of new construction of factories in the US, and to a lesser extent in other advanced countries in the US bloc. And so, if you think about it, going forward, first of all, from an investor's perspective, there will be tons of opportunity in terms of uh, companies or stocks of companies that do industrial automation, logistics like air freight or railroads, trucking, construction equipment, basic materials. All those kinds of things are going to be new opportunities from the investor's perspective. And then finally, I'll just mention, I don't think we're going back to the world of the 1950s where manufacturing was in such a renaissance where a kid could graduate from high school, don't go to college, and immediately step into a well-paying factory job and essentially be in the middle class immediately. We don't think we're going quite that far, but there should be more opportunities for people who don't go to college. So it's going to be a richer, more balanced economy in the future that we think is going to be full of new opportunities. So hopefully that answered your question.
One of the points that you made is that the Chinese Navy exceeds that of the United States in size, and it does indeed. But as Robert Friedman points out, the U.S. has allies in the Pacific. Don't you want to count their navies as well in the U.S. cohort?
But you could also say the same about the Chinese. One thing that literally just in the last month or two, I'm starting to get more concerned about is greater cooperation between the Russian Navy and the Chinese Navy. A couple of reasons why that's important. First of all, whereas the Chinese have the world's largest Navy, we have the #2 Navy, Russia has the #3. If you combine the combat force of the Chinese and the Russian Navy, you have about 600 ships. Now, if you took, say, the Japanese and the Australians and the South Koreans and add those to the U.S. Navy, we don't get up that high. Their navies, they're sizable, but they're not that big. And so just in terms of volume, greater interoperability and greater cooperation between the Chinese and the Russians is important. Qualitatively, it's also important. The Chinese Navy, like I said, it's still pretty much geared toward coastal defense, essentially. They don't have a blue water Navy. They want to get to a blue water Navy, but it's going to take years and years to get there. Well, think of this, though. The Russians already do have a blue water Navy. Now, it's certainly true that the Russian military has not clothed itself in glory with the war in Ukraine. But the Navy actually has performed in some ways pretty well, especially in the sense that so many of the missile attacks, the cruise missile attacks that have been aimed at Ukraine, are coming from Russian naval vessels. They are relatively more modern, I think, and more capable than most of us appreciate. And so that, to the extent that they team up with the Chinese, that allows the Chinese Navy to punch above its weight. So yes, I mean, certainly the U.S. Navy, the U.S. is increasing its cooperation with allies all over the Indo-Pacific, but the Chinese are doing the same thing. I don't think that it necessarily is what saves us. So we basically need to invest in more naval forces ourselves.
Good point. Well, another question now from Stephen Shore asks, why is India in the China bloc? Is this likely to change? Are you referring to BRICS and the fact that both India and China are in BRICS? But is BRICS really a pro-China bloc, or do you have another reference point?
I always get the question about India when I do this presentation. What I want to emphasize is that, I think all of us on this call could probably go through my list of 200 countries and just kind of subjectively, with, kind of a wet finger to the wind kind of approach, subjectively put the different countries into the different blocks. But my goal with this analysis was to be as objective and quantitative and defensible in that way as I could. I showed the one slide highlighting the different criteria that I used. One of them was basically scoring based on what military alliances or groupings they're a part of. What puts India, in my analysis, what puts India in the China-leaning bloc is two things. First of all, they're a member of the Shanghai Cooperation Organization. which is a Chinese-led, basically a security organization. And then also China or India's trade with the US isn't strong enough to offset how I score their trade with China. That is it. Like I say, it's strictly numerically driven, and that's what puts India in the China leaning bloc. What I want to emphasize though is that those countries that end up in the leaning blocs, they're really important because we think one element of geopolitics going forward is that both China and the US are going to try to peel those leaning or neutral countries away from their adversary and back into their own. And we're already seeing that. We're giving all kinds of incentives and putting pressure on the Indians to move in our direction and away from that leaning China position.
Whether what the US is doing to China now in trade and key components, for example, of electronic devices, and how this compares to what US policy was toward Japan prior to World War II, and in a sense provoked their attack as necessary for the survival. And Stephen David points out specifically the embargo of oil to Japan. Um, are we provoking something that we don't want to have happen?
I do think that there's something to that argument. Like I said, the Chinese are already making it clear that they're not going to just allow us to treat them any way we want. They're pushing back without a doubt, and yes, this raises some risk of a miscalculation or some kind of a conflict down the road, maybe an accident. Yes, it's certainly true that anytime you push back, there's a risk that it's going to blow back against you. Uh, on the other hand, our view is that this is a really deep-seated effort by President Xi uh, to assert China. This isn't casual. This is serious, and we don't see either President Xi or President Putin or many of the other leaders in that bloc. They care about status. They care about kind of tribalism, the in-group, out-group, and how they were treated poorly during the century of humiliation and things like that. So, even if we weren't pushing back, they would keep working at us. I think when President Xi says that he wants to bring China to the great rejuvenation of the Chinese people, we take that as serious, and so we actually think that the U.S. Kind of has to respond pretty much the way that we are. So, and indeed, you see a bipartisan centrist coalition between both Republicans and Democrats that feels like this is the right path. So, yeah, there's some risks, but I think it is a trend that is long lasting, and that train is running.
Arnold Sherman asks whether inflation, if it's going to go up even by a percentage point, if there's going to be a social cost to it. And in fact, one additional percent doesn't sound like a lot, but we've seen a lot of people suffering because of inflation.
Right, and that's when I say 3% or so, that's an average. Um, I mentioned that we actually think maybe the more important story is that inflation becomes more volatile and interest rates become more volatile. And that instability, there's a very big social cost to that. That makes it hard for people to decide whether or how to invest. It makes it harder for people to plan how they run their life, what kind of job they go into, you name it. So just one example, at this very moment, after inflation peaked, I guess earlier this year, it's been coming down pretty dramatically. I think we got up to about 9% in terms of CPI inflation on a year-over-year basis. Uh, right now, we're down around 4.5%, I guess. But over the coming few months, we actually think CPI inflation is going to get down below 1%. A lot of that is just base effects, when you compare year over year. But what we think is going to happen is that even if you get down below 1% for a while, it'll start climbing again as the labor market remains tight, and you have this reshoring going on and things like that. So you're going to get whipsawed a lot more than we're used to. And so, yes, it's all going to be a social cost. There'll be costs and benefits. Like I said, there's opportunities, but there's also costs in the new world that we're going into.
So, Robert Friedman comes back with a follow-up on India, which where you can see he makes a good point. India has serious territorial problems with China, and it is a member of the Quad as well. It sounds like India is really straddling the different blocs.
Yes, and like I say, those especially those countries that are kind of in the leaning camps. Um, they're straddling. In many cases, they understand that it gives them a certain amount of leverage. I think that Prime Minister Modi and his government understand that this is an opportunity for them. They've looked at using this leverage to bring more manufacturing to India, to get on better relations with the U.S. I think it's pretty clear that the U.S. has downplayed some of the let's say the social issues, you see in Kashmir and places like that. We're not beating the Indians over the head like some previous administrations have done. So yeah, they're playing this. Another example I think is Turkey. And they're not, Turkey. My methodology doesn't put them in the leaning camp. They're firmly in the U.S. camp, but they are kind of in a border position between the blocs, and President Erdogan clearly is trying to play both sides and maximize the benefit to Turkey. So yeah, it's a dynamic situation, and yes, these countries, when they're headed by a capable, visionary leader who understands this new world of blocks that we're moving into, yes, these countries are going to try to play that as much as they can. It's going to be a very dynamic. It's going to be a very fun world of geopolitical events to watch.
Well, except that the possibility of some clash with China does not fill anybody with joy, I'm sure.
Yes, exactly.
But I wanted to come back to, just as a final question, to your opening point, and that in a sense, this all starts with the U.S. walking away from its hegemonic role that it had since World War II, and opening up vacuums that others have filled or are trying to fill. Would you think, if you step even out of your analyst mode for a minute, that we should try to go back to seeking hegemony or keeping hegemony? And at what cost? In fact, what is the cost of even meeting the Chinese challenge? I think you've written somewhere that it's either higher taxes or cutting government services. This does not sound like a pleasant choice at all.
Yes, and I am firmly in the camp that it's better to maintain hegemony, and I hope that the current centrist bipartisan consensus on rebuilding defense that it stands, and that that same sentiment of rebuilding defense that we see in Japan and Korea and in many places in Europe, I hope that continues as well. It's going to take a significant rebuilding of defense capacity. Like I mentioned, when I was at CIA, I was in a branch that focused on defense economics, and the a key thing that we were trying to get at was how high can the defense burden get before it hurts economic growth? So, in other words, the defense burden is defense spending as a share of GDP, and at the agency, we did an analysis, and I've replicated it several times in my years after leaving the agency. But we found that until you get above a defense burden of about 10% of GDP, higher defense spending actually correlates with stronger economic growth. You only really get a negative impact when you get above about 10% of GDP. And so the reason I bring that up is that, yes, there will be costs as we boost our defense budget again, but we have plenty of economic capacity to do so. I mean, right now we're spending about 3.7% or so of GDP on defense. If you think about it, that means we could, literally, we could almost triple the defense budget and not impinge on economic growth. Now, it would probably exacerbate inflation, but in terms of growth, we have plenty of space to increase the budget. What would probably have to happen, though, since there's not a lot of appetite for higher taxes, that would probably require some really significant cuts in civilian budget accounts. But to the extent that the bipartisan consensus remains that national defense is important again, we think that could happen over time. That they'll start to cut civilian budget accounts more than you might think.
I'm not. I'm not. It depends on whose ox is gored, as they say, and I'm sure there are a lot of people. Arnie Sherman asked, in fact, what social costs do you anticipate? And I can hear the howls already if somebody starts cutting some spending. Anyway, this has really been terrific, Patrick. You've ended on a slightly optimistic note, which I wasn't expecting. And I'm not used to, and neither are most of our members. But I think it's very well grounded, and you've given us the big picture in a way that I think is solid, and it's something we can take home and tell our families about. Thank you so much for coming today. Thank you so much for answering the questions.
Thanks for having me. Thank you.